as it takes whatever action necessary to return inflation to the 2% target in the medium term. Nonetheless, I know that higher inflation and interest rates cause anxiety and concern for many families. That's why the government is already supporting families with one of the largest support packages in Europe, worth £94 billion, or £3,300 per household on average. As interest rates rise, I will not take action that undermines the Bank of England's monetary objectives, but where there are non-inflationary measures we can take to relieve the anxiety faced by families, we will do so. That's why on Friday I met the UK's principal mortgage lenders alongside senior representatives from the Financial Conduct Authority and UK Finance to agree new support for people struggling with their mortgage payments. At that meeting I secured agreement from lenders to a new mortgage charter, which we're publishing today, that sets out what support customers will receive. It's been signed by lenders covering 85% of the UK market and provides support for two groups of people in particular. The first group are those who are worried about their mortgage repayments. If they want to switch to an interest-only mortgage or extend their mortgage term to reduce their monthly payments, they'll be able to do so with the option of switching back to their original mortgage deal within 6 months without any affordability check or credit score impact. For most people, the right course of action will be to continue to make payments on their current mortgage. This will always be the best option and will always mean you pay less interest overall. But this new measure means that people will be able to opt for a lower cost approach for 6 months with full reversibility, giving people the peace of mind of knowing that they can try out a new approach and still change their minds later. This measure will take effect in the next few weeks and means that for a homeowner with a £200,000 property with a £100,000 outstanding on their mortgage over 15 years, they can change their payments with no immediate impact on their credit rating by extending the mortgage term by 10 years, which could save over £200 a month, or moving to interest-only payments, which could save over £350 a month. A further measure for this group of customers means that if they're approaching the end of a fixed-rate deal, they'll be offered the chance to lock in a new deal with the same lender up to 6 months ahead. However, they'll still be able to apply for a better like-for-like deal with the same lender with no penalty if they find one until their current deal ends. This will provide people with more flexibility and optionality to find the best deal for their circumstances. The second group of people we are supporting are those who are at real risk of losing their homes because they fall behind in their mortgage payments. Mortgage arrears and defaults remain at historically low levels, with under 1% of residential mortgages in arrears in 2023, and at a lower level than just before the pandemic. Nonetheless, for the families involved, it is extraordinarily distressing to lose your house. So we want to do all we can to support people who find themselves in such a challenging financial position. As part of our strong regulatory framework for mortgage holders, banks and lenders already provide tailored support for anyone struggling and deploy highly trained staff to help such customers. Support offered includes temporary payment deferrals, part interest, part repayment, as well as extending mortgage terms or switching to interest-only payments. To supplement that, we've agreed as part of the mortgage charter that in the extreme situation in which a lender is seeking to repossess a home, there will be a minimum 12-month period from the first missed payment before there is a repossession without consent. And anyone at all who is worried they could be in this situation should know they can call their lender for advice without any impact whatsoever on their credit score. Lenders will also provide support to customers who are up to date with payments to switch to a new mortgage deal at the end of their existing fixed-rate deal without another affordability test, and provide well-timed information when their current rate is coming to an end. Taken together, these measures should offer comfort to those who are anxious about the impact of higher interest rates on their mortgages, and provide support to those who do get into any extreme financial difficulties. The mortgage market itself remains robust, and the average homeowner remortgaging over the last year had close to 50% loan to value, indicating most people have considerable equity in their homes. Mr. Speaker, tackling inflation is the Prime Minister and my #1 priority. We said we would halve inflation, not because it was an easy thing to do, but because it is the right thing to do. And we won't flinch in our resolve, because we know getting rid of high inflation from our economy is the only way that we can ultimately relieve pressure on family finances and on businesses. And that is why we will seek to remove inflationary pressures in our economy and not stoke them. That is what the measures I have set out today will help to do, and I commend this statement to the House.
Now come to the Shadow Chancellor of the Exchequer, Rachel Reeves.
Thank you, Mr. Speaker, and I would like to thank the Chancellor for advance sight of his statement this afternoon. Families are worried sick to their stomach about what is happening at the moment, but the Prime Minister says, don't worry, it will all be okay. But it's not going to be okay for the millions of homeowners who face an average increase of mortgage costs this year of £2,900. And all of this during a wider cost of living crisis. Now, the Prime Minister told the country yesterday to hold its nerve. But where are people supposed to find the money in the meantime to pay for the Tory mortgage bombshell? The Chancellor and the Prime Minister have not yet said. For many, the Tory mortgage bombshell will mean holidays cancelled, families' savings draining away, and missing out on days spent with family and friends. But for others, it could be much worse. Not moving up the housing ladder, but heading down it through no fault of their own. The Chancellor doesn't need to take my word about how many people will be facing the Tory mortgage bombshell. He could speak to any of the 11,600 families in his own constituency who will be paying £450 more every month in mortgage costs alone as a result of this Conservative government. The Resolution Foundation estimate that millions of households will have to pay a combined total of £15.8 billion more in mortgage payments a year by 2026. That is just devastating. The Tories gambled last autumn with people's livelihoods, and since then things have got worse, not better. Yet ministers take no responsibility for the damage that they have caused and blame anything and everyone else. Yet again today, the government claims that there are global factors, that it's all global factors, yet the latest data show that a typical household in Britain is now paying over £2,000 more per year for their mortgage than in France. Over £1,000 more per year than in Ireland or Belgium, and over £800 per year more than in Germany. Now, the Chancellor is going to need a better scapegoat. Labour set out our plans last week. Our measures were a requirement. Yes, a requirement, because all lenders need to play their part when people are struggling. Our plan would have provided real help, but government have provided just a bad cover version. While many banks and building societies are doing the right thing by their customers, a voluntary set of measures is just not good enough. The Chancellor today said that the voluntary measures would cover 85% of the mortgage market. What is his answer for the more than 1 million families who are missing out because their lender hasn't signed up to this scheme? Tough luck? Just how bad does it have to get before the Chancellor recognises that mandatory action is needed to provide meaningful assistance? So I would like to ask the Chancellor the following questions. Can he confirm what consequences there are for firms who have not signed up to this scheme? Where is the plan for renters, who the Chancellor didn't even mention in his statement today, many of whom are paying higher rents because the mortgage costs of their landlords have gone up? Why does the Chancellor think that savers are not enjoying the full benefits from rising interest rates in the same way that mortgage holders are feeling the full pain? Why does the Chancellor think that the UK has the highest inflation in the G7? And does he still think the government is on track with its own target of halving inflation by the end of the year? How does the Chancellor think that getting rid of house building targets will help increase home ownership? And finally, Mr. Speaker, 6 days ago, the Chancellor said in this House that he was proud of the government's economic record. with energy bills twice as high as they were last year, with food inflation close to 20%, and with millions hit by the Tory mortgage bombshell? Is he seriously saying that he is proud of that record? Mr. Speaker, people work hard to get on the housing ladder, yet dreams now risk becoming nightmares due to the decisions of this Conservative government. The Chancellor today has come to the House with a watered-down package that does not meet the task of dealing with the Tory mortgage bombshell.
Thank you, Mr. Speaker. And I'll deal with her specific points first. She says these measures should be mandatory. So why did Labour oppose the intervention power in the Financial Services and Markets Bill that would have made that possible? She said that she wants action for savers, and I have indeed been talking to banks about action for savers, and we will keep the House updated. But what she carefully did not mention is that we actually secured on Friday more than Labour committed to, because our measures provide protection for people missing for payments, not for 6 months, but for 12 months. But the main point, Mr. Speaker, is that she wants people to think that she is fiscally responsible. She won't take risks with inflation. So why on earth is she committed to borrowing £28 billion a year more, when as a former Bank of England economist she should know that will be inflationary and push up the cost of mortgages? Don't listen to me, Mr. Speaker. Listen to people like Paul Johnson of the IFS, who said about Labour's plans, and I quote, "Additional borrowing both pumps more money into the economy, potentially," and she may not want to hear this, this is what Paul Johnson says about Labour's plans. Quite, additional borrowing both pumps more money into the economy, potentially increasing inflation, and also drives up interest rates. It's Labour's mortgage bombshell, hidden in plain sight. Isn't the reason she doesn't want people is that she doesn't want people to notice the real comparison here, which is that her party faced an economic crisis in 2008, just as this government did last year. The difference is that we are taking the difficult decisions to restore sound money and public finances. They ducked each and every one of those decisions, ran out of money and left it to others to clear up the mess.
Sir John Redwell.
Given that we don't want too much pressure on mortgage holders who will be struggling, will the government launch a series of supply-side measures to increase supply of things that are short, to promote more homegrown food and more home-produced energy, and above all, to work with public sector employees and managers to have a productivity revolution in the public services where there's been a collapse in output?
Well, as so often, my right honourable friend is absolutely right, and it is in supply-side measures that we see the long-term solution to the inflation problem that we and many other countries face. That is why the budget was focused on labour supply measures such as a massive reduction in the cost of childcare, up to 60% cost in the reduction of childcare for families with young children, and it's why my right honourable friend, the Chief Secretary of the Treasury, is launching the very productivity review that my friend has called for many times to make sure we're getting better value for money out of public money spent.
Spokesperson Stuart Hulls.
Mr. Speaker, I think with a debt to GDP ratio at 100%, the Chancellor was rather brave to talk about sound money. However, can I welcome this statement and early sight of it, notwithstanding it was described by Reuters as a package of limited relief measures. It is nonetheless necessary and welcome. Support from lenders, no repossession within 12 months of a missed payment, the chance to lock in a deal 6 months early, a temporary move to interest only, and no impact on customer credit scores. Can I also say I think his words about anxiety and concern were the right tone, unlike his Prime Minister yesterday. However, that doesn't begin to answer some of the fundamental questions. Given the base rate drives the mortgage rate, and the base rate, as the Chancellor knows, is the primary tool the bank has to tackle rising inflation, is this now not the time to review the Bank of England's targets and tools? Secondly, is the government genuinely convinced that using a rising base rate to tackle input inflation caused by external shocks, is that really the best approach we have, other than to tip the economy into recession which some people are actually suggesting, which I hope the Chancellor would agree would be a quite idiotic and catastrophic thing to do. And thirdly and finally, Mr. Speaker, should we now not revert to forward guidance on base rates from the Bank of England as we had under Mark Carney during the financial crisis? It may not affect the trajectory of interest rates and mortgage rates initially, although it might, but it would certainly provide certainty to business, retail and mortgage borrowers.
Well, I often don't agree with what the honourable gentleman says, but I actually thank him for the constructive tone of his comments this afternoon, because he is absolutely right to talk about external shocks. And he will know, as we do, that interest rates have gone up by similar amounts in the United States, Canada, Australia and New Zealand, and that core inflation is actually higher in 14 EU countries. So we need to look at all the tools at our disposal. I think whether the Bank of England Governor issues forward guidance is a matter for the Governor, but I'm sure the Governor will have heard his comments, and I think that it's important, because we respect and support the independence of the Bank of England, that I allow him to make those judgments. But I would disagree with him in terms of his suggestion about reviewing the target for inflation. I think that target is the right target, and I think it's very important that we give everyone confidence of our total commitment to hit that target, which we will.
Sir Desmond Swain.
Given the significant tightening in the measures of monetary growth, is he absolutely sure that the Bank of England has got it right?
Chancellor.
Well, the Bank of England Governor himself has been very open about the fact that their inflation forecasting has not been accurate, and they are conducting an independent review to see how they can do it better. So, you know, it's clear that there have been some issues with the way that process has worked. But what I would say to him in all... Mr. Speaker, you're absolutely correct to correct me on that point. So what I would say to you, Mr. Speaker, about the point raised is simply that I think in my dealings with the Bank of England, I have never once had any reason to question their resolve to hit the target, but we need to make sure the forecasting is better.
Dame Angela Riedel.
Thank you very much, Mr. Speaker. 8,600 families in Wallasey are facing increases in their mortgage bills of up to £1,800 in a year, a huge extra chunk of worry. So I welcome the Chancellor's statement, but doesn't he worry that the banks are being very slow to pass on interest rate rises to those who are saving, whilst they are passing almost immediately interest rate rises on to those who borrow, which makes the interest rate mechanism much less effective in dealing with the inflation situation? And did he notice, like I did, that the banks this quarter made over £4 billion extra on the differential between these? So shouldn't he have been much tougher on the banks? And what is he going to do to stop this profiteering?
Chancellor.
Well, the Right Honourable Lady is absolutely right. It is taking too long for the increases in interest rates to be passed on to savers, particularly with instant access accounts. The rates are more frequently being passed on to people who have fixed notice accounts. But she's right, there is an issue there. I raised that issue in no uncertain terms with the banks when I met them, and I'm working on a solution because I think it is an issue that needs resolving.
Sir Bill Woodman.
My right honourable friend will know that increasing liquidity in the housing market will give homeowners more options and choices. Will he look at reducing the burden of stamp duty so that he will help homeowners both current and future?
Well, I thank my honourable friend for his comment. The level of stamp duty is something that, as with all taxation measures, is kept under review, and we make decisions at the time of fiscal events, whether autumn statements or spring budgets, and we'll continue to do that.
Sir Alday.
Thank you, Mr. Speaker. The root cause of soaring interest rates, other than the shambles of the mini-budget, is this government's failure to control inflation. which the Prime Minister took personal responsibility for to halve inflation this year. So will he explain why this government is refusing to take obvious steps to tackle inflation, like reinstating energy support for farmers and businesses, cutting import costs for small businesses, and bringing down the NHS waiting list to alleviate the squeeze on our workforce?
Chancellor.
I find it strange that she should be criticising the government's failure to tackle inflation when her party is supporting a multi-billion-pound package of mortgage support that would increase inflation. And I have to say, they are positioning themselves brilliantly as the pro-inflation party.
Mark Pritchard.
Thank you. Thank you, Mr. Speaker. Can I welcome the new mortgage charter, but can I say with all members from across the House that constituents are suffering. They are very concerned. Many are having to choose between food, clothes, shoes, and paying the mortgage or paying the rent. And decisions that we make here, either as a governing party or cross-party, are having a direct impact on individuals' lives every single day. So can I join cross-party with the Honourable Member for Wallasey and say she is absolutely right that so often when the base rate rises, lenders are very quick to raise those interest rates on our constituents. But when they fall, and they surely will fall, and hopefully very soon, possibly in the autumn, we'll see. Can my right honourable friend make sure that those reductions are passed on as quickly as possible to our constituents?
Chancellor.
Well, my honourable friend is right to draw attention to the human consequences in any economic shock. And I am extremely proud that under this government since 2010, 1.7 million people have been lifted out of absolute poverty, including 400,000 children. And that is why in the autumn statement we prioritised giving help to people facing the biggest challenges with a £94 billion package of support to help people through the cost of living crisis. But one thing that can definitely happen better than it is now is passing on increases in the base rate to savers.
Doherty.
Thank you, Mr. Speaker. One of the reasons why nearly 10,000 of my constituents in Cardiff South and Penarth are going to be hit by the Tory mortgage bombshell is that, of course, many of the deals which are coming to an end in this 12-month period were taken out when interest rates were below 2%. They're now at 5%. Will the Chancellor set out clearly what his private analysis is of the likely rises in arrears and repossessions over the next few months?
I don't have any private forecast that I haven't shared with the House. What I can say is that they're currently about 0.9% of families with mortgages are in arrears, and that is nearly 4 times less than it was in 2009.
Anna Firth.
Thank you, Mr. Speaker. I thank the Chancellor for his statement, and a third of my constituents have mortgages and will welcome this range of measures. But now that the majority of the mortgage market is predominantly fixed, not floating, would he agree that rising short-term interest rates will not necessarily result in falling inflation, and that we do need to look at other measures, and such as making sure that interest rates are passed on to savers so that they keep their money in the bank?
She's absolutely right. I mean, it is still the case that, notwithstanding the fact that 85% of mortgages now are fixed to some degree, there will be an extra 1.2 million people who will feel these, 1.2 million families who will feel the increase in interest rates over the months between now and the end of this year. So it will be felt by many, many families, but we should do everything within our power to tackle inflation, because in the end, that is the only way to end the misery for so many people.
Richard Beck.
Thank you, Mr. Speaker. Many of the banks that the Chancellor's been talking about are raking in bumper profits by refusing to pass on higher interest rates to their savers. Surely a windfall tax on these additional profits would allow the government to provide mortgage holders with the kind of support that they really need at this time. And before the Chancellor dismisses this idea, can I gently remind the Chancellor that even Margaret Thatcher imposed such a windfall tax on banks' excess profits?
Well, I hear what the honourable gentleman says, but he'll be pleased to know that banks already pay a surcharge on their corporation tax of 3%. That means they pay 3% more than everyone else, as well as a levy on their balance sheets.
Philip Oliver.
Welcome the action the Chancellor has taken on this issue. Effectively increasing the flexibility of mortgage terms and conditions will provide much welcome relief to homeowners who are really struggling with anxiety at this present time. The Mortgage Charter sounds great. What obligations has he insisted with the mortgage companies on getting this information out to mortgage holders to inform them of the extra flexibility in the mortgages that are available?
Chancellor.
Well, my honourable friend makes a very good point, and a number of lenders, in fact all lenders, had some of these measures to a lesser or greater extent. But what is significant about Friday is that they've basically aligned their offer so that it is much easier to communicate, which means that all families with mortgages, and this charter has been agreed to by 85% of the market, so very, very large majority of mortgage lenders, are agreeing to a simple set of terms that they will all follow, so it's easy for people to understand what their rights are.
Thank you, Mr. Speaker. The people watching this who have too much month at the end of their money need better straight answers from the Chancellor. He's ducked the question about whether he actually thinks the government is going to reach its own targets on halving inflation. He needs to be honest about what he thinks the consequences of only reaching an inflation target of 5% will be. And actually, I join with colleagues across the House who've raised concerns about the fact the vast majority of mortgages are fixed mortgages. People facing the possibility of eviction, even a year's time, will be sick with worry. What assessment has he made if inflation only gets to 5% of the impact? And when will he learn the lessons of the energy companies and not wait until we hold the banks responsible for their role in all of this?
Chancellor.
Well, with the greatest respect to the Honourable Lady, who I do in fact have a lot of respect for, I think she is being a little bit churlish in her approach as to what the government has done, because I haven't waited. I actually called in the banks and the lenders on Friday, and I got them to commit to a set of terms that will make life easier for 85% of families with mortgages if their mortgage comes up for renewal. And with respect to the government's target to halve inflation, both the Bank of England and the International Monetary Fund have said they believe we are on track.
David Simmons.
Thank you, Mr. Speaker. I've never forgotten the anxiety that was caused to my parents in the late 1980s after they bought their current home and interest rates soared. But does my right honourable friend agree with me that the package of measures which he has announced will help enormously to alleviate the anxiety which many households are feeling without allowing rampant inflation to put my constituents' dreams of home ownership even further out of reach?
Chancellor.
Well, I thank my honourable friend for a very thoughtful question, and I do think that the measures agreed to by the banks and principal lenders on Friday will make a big difference. And in particular, for people who are genuinely in arrears, they know that their house will not be forcibly repossessed for 12 months. That is a very important piece of reassurance. It gives people longer to get their finances in order. And I think it also particularly encourages people who are worried about the impact of their credit score, that the simple fact of having a conversation if you're in distress won't have any impact on that credit score. So I hope that means for people like his parents were that this is an important set of measures.
Brendan O'Hara.
Thank you, Mr. Speaker. In his statement, the Chancellor said there will be a minimum 12-month period in the first missed payment before a repossession without consent. Does this start or come into effect from today, or will this be applied retrospectively? And what would that mean for hard-pressed families who, because of soaring mortgage costs, say they missed August, but they managed to pay September, October, November, December, but missed January? At what point does the clock start ticking on their repossession?
Well, this is an agreement that will take effect in the next few weeks, but the context of the agreement that was made with the banks and lenders is one where they are agreeing to do everything they possibly can to give people longer to get their affairs in order so that repossessions are reduced or eliminated altogether. So I think this will be a positive step forward.
Siobhan Bailey.
Thank you, Mr. Speaker. I listened really carefully to the Shadow Chancellor because I want to hear serious ideas. The public are not daft. They can see there is incredible pressures across the world. But not only are they coming up with ideas, also breaking their own economic pledges. And it made me think of the latest Labour councillor to step down, who said recently she watched Keir Starmer's leadership with increasing concern and frustration because it's seeing the lack of policy to help those most affected with the cost of living. Does my right honourable friend agree with me? Will he say more about how we can keep working with the lenders so it's not just a one-off conversation that he's had, to create solutions to help some of the problems ahead of us?
Chancellor.
I'm happy to give her that reassurance. I will continue to talk not only to the lenders but also to regulators who I'm meeting later this week to see if there are any areas at all where price reductions that should be passed on to consumers are not being done so, and I hope to update the House further.
Debbie Abraham.
Thank you, Mr. Speaker. I'll put aside the fact that the Chancellor didn't answer my right honourable friend in terms of what happens to the million people that are outside the 85% of mortgage providers as far as this is concerned, or why we have higher borrowing costs than France, Germany and Ireland. 9,200 homes, families are affected by the increase in interest rates and the mortgages that they're going to be paid. Voluntary codes have a limited impact. We know, for example, from the prompt payment code. So who is going to be actually monitoring the compliance of the code, and how many people will have to be disappointed by their lender before the Chancellor put this into a statutory form?
Chancellor.
It's generous of her to put aside so many things. I'll also put aside the fact that Labour opposed the powers that would have meant mandatory imposition of this charter on the banks and lenders would have been possible. But what I would say to her is that the charter we have will be monitored by the Financial Conduct Authority, and they will take appropriate action if they think that banks and lenders are in breach of their statutory duties.
Jane Hunt.
Thank you very much, Mr. Speaker. I recently met with constituents in the Wolds villages who have shared ownership arrangements for their properties with a housing association. They've never actually missed a payment. Please can my right honourable friend confirm that the mortgage charter will assist those with shared ownership schemes across the country?
Chancellor.
I'm absolutely delighted to give that confirmation.
Liz Saville-Roberts.
During the 2008 credit crunch, Plaid Cymru developed a mortgage rescue scheme as part of the One Wales government. Through the cooperation agreement, we've now secured £40 million to support Welsh mortgage holders in difficulty, and people look to government to help them keep their homes in a crisis. Will you follow where Plaid Cymru led and implement direct protections for those hardest hit by interest rate increases?
Chancellor.
We will do everything we possibly can to help people in difficulties, except measures that themselves are inflationary.
Walker.
Thank you, Mr. Speaker. I welcome the fact that my right honourable friend, in tackling this huge challenge, is determined not to increase inflation. He recognised, though, that with so many people owning their properties outright and not having a mortgage on them today, actually increasing the payment for people who save is a very important element to tackling inflation. Can I wish him every success in his further conversations to encourage the banks to pass on interest rates to savers?
He is absolutely right. If more people are encouraged to save, that is technically counter-inflationary and is something to be encouraged.
Thank you very much. Mr. Speaker, due to the disastrous policies of Conservative governments, including eventually crashing the economy, hard-working Brits, including people in my Slough constituency, are having to pay the price via painful premiums on their mortgage or rent. But why specifically does the Chancellor think that the latest data shows that someone with a £200,000 loan is paying over £800 more annually in the UK than in Germany, and over £2,000 more than somebody in France?
Yeah, good.
Chancellor.
What I would say to him, if he wants to look at Europe, he would see that 14 EU countries have higher core inflation than we do here. And in terms of interest rate rises, they've been at similar levels in Australia, New Zealand, Canada and the United States.
Simon Fell.
Thank you very much, Mr Speaker. I thank my right honourable friend for his statement and his hard work in securing this new mortgage charter. It provides certainty and comfort for people in globally uncertain times. The simplification of the terms, the coverage of 85% of the market is welcome. I wonder whether he can speak to his views on the 15% of the market who aren't round the table at the moment, and also what message he should be sending to their customers.
Chancellor.
Well, we will be making big efforts to sign up any remaining lenders who have not signed up to the Charter. To get, I think, to 85% over the period of 4 days is a good start. We'd love to get the other 15% on board, but what I would say is that if they're not on board, that will make their mortgage offer less competitive to many thousands of families who will be looking to sign up for their new mortgage with someone who does take efforts to reduce the anxiety they may feel.
Justin Mathers.
Thank you, Mr Speaker. My constituents who are facing eye-watering increases in their mortgage repayments are asking, as other members have, how they can square that with the increased profits the banks and building societies are making. But they're also asking whether this pain is for any gain. Inflation has not come down in the way that was hoped from the government. And is it the case that the mortgage market is now fundamentally different to what it was like in the early 90s, last time we had spiralling interest rates, and whether this tool is actually just hammering a group of people and not actually tackling the core problem? So I'll just ask the Chancellor whether he believes there is an element of truth in that, and whether there are other tools that there are at its disposal to actually get inflation down.
Chancellor.
I think he's absolutely right to say that the mortgage market has changed, with 85% of deals now having an element of fixed rate in them. But I still think interest rates are the most effective tool, and I would say that other countries have used interest rates and are seeing their inflation starting to fall, and I would expect it to do so here.
Alison Thewlis.
Thank you, Mr Speaker. The reality is that this mortgage crisis is not the only crisis that this government is presiding over. Step Change, the debt charity, have found that 45% of mortgage holders, some 7 million of them, are now struggling to keep up with all their other bills following the rise in interest rates. So can I ask the Chancellor, what conversations is he having with those companies providing other forms of consumer credit, and with debt advice charities who are providing support on the front line to many people who have never had to call on their services before?
Chancellor.
Well, we continue to have conversations with everyone who's involved in relieving families who are in distress because of debt arrears, whatever they are. But I think the most important help we can give people is the cost of living support, the decision to extend the energy price guarantee, which has reduced people's electricity bills and meant overall we've paid about half people's electricity bills over the last year.
Paula Barker.
Thank you, Mr Speaker. Last week, the Bank of England confirmed that the rise in rates has been worse here in the UK, with overnight swaps the key driver of mortgage rates rising more than twice as much in the UK than in the USA. What assessment has the Chancellor and his department made of the reasons why the UK has been much worse hit than elsewhere? And will he finally admit that this is the case? And would the Chancellor just indulge me in explaining the difference between poverty and his new catchphrase of absolute poverty?
Chancellor.
She may want to belittle the fact that there are 400,000 more children out of absolute poverty, 200,000 pensioners. I think it's a very important achievement, and I'm very proud of it. But I also think she should recognise that the primary cause of the inflation that we're seeing is international factors that has affected very many other countries, which is why we are seeing interest rates rise across the world.
Toby Perkins.
Thank you very much, Mr Speaker. It is the 8,600 mortgage holders in Chesterfield who've seen their mortgage increase by an average of £1,900 a year will be very much conscious that in the Chancellor's response, he's very happy to blame global factors. But when he's asked about those specific countries, like France, like Germany, the major European nations, where the outcomes are not as bad as they are here in the UK, he quickly deflects and says, well, I'd like to talk about Australia or Canada. Will he answer the question that my honourable friend from Leeds West has asked, and explain why it is worse for constituents of mine in Chesterfield than it is in France, than it is in Germany, and it is in other countries that he's been asked about?
I mean, the truth is that you can pick countries in Europe where things have not been as severe as here. But you can pick countries in Europe where they've been more severe, such as the 14 EU countries which have got higher core inflation.
Bill Esterson.
Well, thank you, Mr. Speaker. He's not going to get off. We're not answering that question.
Yeah.
We're going to keep asking him again and again until he answers. Why is it that people are paying £800 less in Germany than here, £1,000 less in Ireland and Belgium than here, and £2,000 less in France than here? What is it that their governments, their economies are doing differently? Or is it just that they don't have the problem of 13 years of this Tory government that's behind it?
Chancellor.
Well, let me give the same answer that I gave to his honourable friend. Core inflation is higher in more than half EU countries, so it isn't just about us.
Beth Winter.
We've had 13 interest rate rises in a row, yet little help for those in housing need, and 13 years of public sector pay cuts, and that's all the Tory government has done is to double down on more real-term pay cuts. When is this government going to take action to tackle the cost of living crisis by raising incomes? And having bailed out the banks in 2008-2009 to the tune of hundreds of billions of pounds, shouldn't the government now not deal with the causes of inflation by controlling bank profiteering and redistributing the extreme wealth that exists to those millions of people, including those in my constituency, Cynnon Valley, who are suffering and are at serious risk and are petrified of losing their homes through no fault of their own?
Chancellor.
Well, she is absolutely right to be concerned about families in her constituency, as we all are in our constituencies, who are worried about the impact of rising interest rates on their mortgage repayments. She is wrong to suggest that this government has not been extremely generous in its cost of living payments, which at £94 billion are more actually than her party was calling for. And if she wants to talk about the last 13 years, maybe she should reflect why a Conservative-led government was elected in 2010. It was to pick up the pieces of a terrible economic mess that her party left behind.
Chris Stevens.
Mr. Speaker, citizens of East Scotland have reported that requests for advice from people who were homeless or at risk of homelessness has reached its highest ever level in May this year and was up 30% from May 2022. So what additional measures does the Chancellor plan to protect the most vulnerable households from the impact of soaring interest rates on their mortgage repayments?
Chancellor.
Well, let me tell him what we've done for those families. For families on means-tested benefits, this year they'll get a payment of £900. For pensioner families, they will get a payment of £300, and for families with someone disabled, they'll get an extra payment of £150, alongside a lot of other measures.
Alice Cunningham.
Mr. Speaker, two of my constituents face a near tripling of their mortgage payments to over £2,600 a month. Now, it's easy for me to talk about the Tory mortgage bombshell and rightly blame the government for crashing the economy. But what does the Chancellor have to say to my constituents? And why do they have to pick up the bill for government incompetence?
Chancellor.
Well, what I would say to his constituents is that we are taking the difficult decisions to deal with inflation in this country as other countries are with inflation in their countries, and we will do what it takes, because dealing with inflation is the only way in the long run we can stop more families going through what those constituents are that he referred to.
Helen Morgan.
Thank you, Mr. Speaker. I have constituents whose mortgages were with Northern Rock when it collapsed back in 2008, and they've been moved against their will to inactive lenders who've not allowed them to remortgage onto fixed rates. They're now trapped paying variable rates for a long period of time, and they will continue to be so going forward. Is there any help for mortgage prisoners in the measures that the Chancellor has announced today?
Well, she raises a very fair point, and I will write to her with some details of what we're thinking in that area.
Mitchell Muscle.
Thank you, Mr. Speaker. When mortgages go up, private rent goes up, and yet the local housing allowance disparity is growing faster in places like York than anywhere in the country. So what process is he set in train to review the local housing allowance, but also the broad rented market area, which is out of kilter in places like York compared to the surrounding area?
Chancellor.
Well, she's absolutely right to talk about the impact on renters because of the high prevalence of right-to-let landlords and the pass-through effect. And that is an area we're looking at in a great deal of detail, and I will write to her with some of the things that we're looking at and planning to do.
Martin Doherty.
Let's quote the Chancellor in his statement, Mr Speaker. This new measure means that people will be able to opt for a lower cost approach for 6 months with full reversibility, giving people the peace of mind knowing they can try out a new approach and still change their minds later. So let's go back to the issue of mortgage prisoners. Why doesn't he know about the assistance that his Chancellorship, his Chancellor of the Exchequer, is not able to give him? Why doesn't he have an answer to that question, given the statement he just gave?
Chancellor.
It is a very complicated issue, and I've said I will write to the Honourable Lady. I'm happy to write to the Honourable Gentleman, but if he's saying, are we doing nothing to help people struggling and worried about mortgage repayments, I would just urge him to read the statement in full.
Jonathan Edwards.
Mr Speaker. The so-called mortgage time bomb will hit younger generations in particular. So what fiscal measures is he considering to help younger generations and to address the financial intergenerational unfairness that exists in the UK?
Well,
Chancellor.
you know, he is right to draw attention to that issue, and I would simply say that the biggest measure in the spring budget was childcare measures, which will mean that families with young children can get up to £6,500 of help with their childcare costs to help them go back to work. That will help those families, but will also help tackle inflation.
And finally, Jim Shun.
Thank you, Mr Speaker. Can I first of all thank the Chancellor very much for his statement today and for the very clear help that the Chancellor is trying to give. So I very much welcome the move to ensure that in the extreme situation of a repossession that there will be a minimum of 12 months for the first missed payment. But can the Chancellor confirm if this is from any first missed payment or from a specific time, considering that there may be those who missed a payment, for instance, say 5 months ago, and none since, but who have lost a job or are ill? Will this extension and the compassion be taken if more than one payment is missed within the last year? And how will the Chancellor ensure that his goal of giving people time in exceptional circumstances is not circumvented by those banks and others?
Chancellor.
Well, he's absolutely right to raise that issue, and I want to reassure him that banks are required by the FCA for people who get into arrears to offer them a tailored solution specific to their particular circumstances in order to make sure that precisely the kind of thing that he worries about won't happen.